class, we will focus on a basic accounting principle, which is the difference between the accrual logic and the cash logic. If we have a transaction, and we can have whatever kind of transaction, it can be, for example, the selling of the product or the purchasing of raw material. So given this transaction, we can record this transaction either by using an accrual logic, but also using a cash logic. So the same event can be registered into our financial statement by following one of the two accounting principles. Let's try to understand what's the difference between them and how do we register them in a different way. Let's start from the cash logic, which is simpler. If we have the cash logic, the purpose is to register the cash that is associated to a certain event, which means that we are going to register the cash in the moment in which the company receives some money. For example, if the company is selling product, we are going to register a cash in the moment in which the cash is received by the company. On the opposite, we are going to register a cash out in the moment in which the cash is paid by the company. For example, if a company is purchasing raw materials, in the moment in which raw materials are paid, we are registering a cash out. So, by adopting a cash logic, this is really simple because events are registered only in the moment in which the cash is received or in the moment in which the cash is paid. A little bit more complex is the accrual logic, but actually this is the focus of the majority of the financial reports. If we have an accrual logic, we are going to register the events in the moment in which the transaction has its effects. I'm going to explain it a little bit better. If we have the effects, this means that we can register a revenue, and the revenue is registered in the moment in which the company is selling the product. In this case, the transaction has its effects because this means that an invoice has been issued from the company A to the company B, whatever the moment of the payment. So if we are using an accrual logic, we do not consider the moment of the payment, but we are considering the moment in which the selling product has been transferred from one company to another one, which means that the transaction has its effects. On the opposite, instead, we are going to register an expense in the moment in which it is associated to a revenue. So pay attention because, let's say, the expense is related to the revenue. If we have the revenue, we need to identify the resources that are related to the specific revenue. And only if we have the expense related to the revenue, we can register the expense itself. The output of this accrual logic is to identify profit. So if we are using an accrual logic, we can find a profit as a difference between revenue and expense, while if we are adopting a cash logic, we can identify the net cash of the company as the difference between the cash in and the cash out. Let's try to apply this concept, which is fundamental for our financial accounting, by looking at an example. Assuming that we have a company, whatever kind of company, that sold some product in 2013 and the amount of product that are sold corresponds to 40 million euros. Given this 40 million euros, 30 million euros are received by cash in 2013, while the remaining 10 million euros are received always by cash but in 2014. In order to realize this product that have been sold in this year, the company of course needed to purchase some raw material, and the raw material purchase in 2013 corresponds to 25 million euros that have been paid immediately by cash. Our question is, can we identify the cash and the profit of 2013? So this is a simple event. Actually, there are two events, the selling of the product and the purchasing of raw material, and we want to register them first following a cash logic and then following an accrual logic. Let's start from the cash logic. That's simple. We are in 2013 and we need first of all to register the cash in. What's the cash in 2013? The cash in is just 30 million euros because the company received by cash only this amount, because this amount of money will be received the next year. So the cash in 2013 is equal to 30 million. Then we need to identify the cash out. The cash out of 2013 is the overall amount of purchasing of raw material, which is 25. So the difference between the cash in and the cash out gives us the overall cash, the net cash of the company, which is equal to plus 5. So at the end of 2013, the company has a cash of 5. Now let's register the same event by using an accrual logic. If we have an accrual logic, the starting point is the revenue. What's the revenue in 2013? The revenue is the overall amount that have been sold by the company because the transfer of the property happened in 2013. So we have that the revenue of this year is equal to 40 million. And then we need to identify the expenses. So what's the value of the resources that is required in order to realize this revenue of 40? And we can look at this here. It is 25 million. So 25 million euros of resources were required in order to sell these 40 million euros. So we need to register the resources that have been adopted in order to sell these products. This is the accrual logic. The expense is recorded only if we have a revenue which is registered in the same year. Of course, we are always in 2013. So the difference between the revenue and the expense gives us the profit of the year. And you can see that the profit of the year is 15, plus 15. So look at here. If we adopt a cash logic, we can say that the company at the end of the year has a net cash of 5. But if we look at the accrual logic, we have a profit of 15. So pay attention, because either we are using an accrual logic or a cash logic, we will have very different information. And this principle is really important because some of the financial reports are defined by using an accrual principle, while some other by using a cash principle. If you want to be more precise, the accrual logic is adopted by the balance sheet, the income statement, and the statement of changes in equity, while the cash logic is adopted in the cash flow statement. Keep in mind this because we are going to register the events in a different way.